Hey everybody, thanks for joining us to chat DeFi. I'm excited to hear your questions. I have been interested in cryptocurrency since 2014, and I've been working at Shapeshift for the last 5 years. I've seen massive growth in this industry, but I've also weathered the bear markets and the crypto winters. Shapeshift started as a place to easily trade one crypto for another, and we really wanted to be a decentralized exchange before the technology was there. So we did our best to be non-custodians when possible. Fast forward, we got into some regulatory issues where we needed to take our customers' information, and that's never what we wanted to do. So we saw a huge opportunity when the decentralized exchanges came about, like Uniswap and PancakeSwap and some SushiSwap, and as well as Thorchain, which allowed for native cross-chain swaps. And so what we were able to do is integrate these decentralized exchanges, but not lose any functionality over our platform. And that one thing really inspired us to move to a decentralized autonomous organization. So we are actually taking our centralized entity, shutting down all the legal structures, distributing the balance sheet to the shareholders. And we have launched a token, the Fox token, and we've airdropped that out, and that's our governance token for our DAO. And we're seeing a ton of movement. Just recently passed a treasury management and diversification proposal, which allows myself and 5 others to take 60 million Fox, which is about 60-ish cents today, and really take these DAO to DAO collaborations and make our treasury make money for us. So I'm really excited to share my experience with you guys and answer any questions that you have. And I'll share my Twitter in the chat.
All right, Kenny.
Yeah, great. Nice to be up here with you, Danielle. So my name is Kenny Estes, CEO, founder, or co-founder of Diffuse. My background is actually high-frequency trader. I started when I was 18, strangely. So one of the first ones in that space, did it for 10 years. And along the way, started spinning up opportunistic fund vehicles. So Diffuse Digital is really a natural extension of that. So we are spinning up, or we're launching a family of digital asset funds that are going after a particular market opportunity or just an inefficiency we see. So we launched 3 funds in 3 months, starting H2 of this year. One's an index fund, and the other 2 are DeFi funds, where we're going largely non-Ethereum, all of the other blockchains, where we participate in market making pools, which is funny because I used to do market making in traditional finance, and now I'm doing it in DE finance. So it's kind of gone full circle. But those funds are deliberately constructed. So one is like a market neutral high yield, and one is a market long high yield. And just because I still see Shalin here from the last one, I caught the end of his thing. We do use Sidrania. I know we had that was a key thing to look for. So,
all right, so I'm going to jump right on in. Like I said, Pete, I see some questions already coming in. The recording will be available, but let's start with what's the status of the market? As we all know, DeFi is the Wild West. What are both of you guys seeing as current trends or direction? You want to go first, Danielle?
Sure. Yeah, I love to start this question and just kind of say, decentralized finance, Ethereum, what is that? What is Ethereum? Ethereum is programmable money. Ethereum did what Bitcoin did not do and allows us to build on top of this cryptocurrency. I like to say Bitcoin replaces gold, Ethereum will replace banks. And so what allowed us to make this programmable money work is liquidity. And so in the traditional markets, you have an order book, you have some matching, some one-to-one type stuff. In DeFi, what makes us able to do what we do is this liquidity providing. And so you see that in either lending and borrowing, one-sided, you put up one side. You see it in these decentralized exchanges where you put up maybe 50-50 for a pool. And so I see that as the current trend, just in general, liquidity providing, figuring out how to get involved in that. And then I think as well for me, of course, I see the trend of DAOs. And so again, that's a decentralized autonomous organization, meaning that the funds as well as what the organization does is governed by token holders. So by people who hold that token, and then they can come in and vote and make decisions. So I see DAO to DAO collaboration happening at a rapid pace. I've been in this industry for 7 years now, and last 3 months, I can barely catch my breath. It is wild. And you said it right, the wild, wild west.
What about you, Kenny? What are you seeing?
Yeah, so again, we'll go back to super high level. Danielle talked about Ethereum and programmable money, but DeFi in general, and the previous speaker mentioned this as well. Really, it's doing everything that a financial institution does without the institution, right? That's the goal. So just as a starting point, DeFi itself can literally encompass everything, right? Because what does a financial institution touch? Everything. All commerce, just financial institutions are in some way, shape, or form involved. So if they're able to, realize the ambition of taking all of that and doing it in a permissionless manner, this is one of the most fundamental shifts we will see, if not the most fundamental shift we will see in our generation, right? It's a big deal. The way the DeFi started was where banking started, right? The banking was the first DeFi product, as you will. You're going to make a smart contract pool, or there's sometimes a pseudo centralized party involved, like a BlockFi. And we're going to borrow at X and lend at Y, and we're going to make a spread, right? Pretty mature. A lot of DeFi dollars went into that. And that was, the DeFi summer of last year. Quickly, though, we saw all sorts of other pockets pop up. The one that I mentioned before is market making. They've developed Uniswap was really the first one to get it going. And everybody else is more or less a clone of it, let's face it. But they're taking traditional market making, so converting from one asset to the other, and they found a way to do it to incent people to provide liquidity and generate a yield by just staking pools. It's a very simple prospect, and we're spending a lot of time on that. More recently, when we're talking about financial institutions, with the likes of Olympus DAO and Time Wonderland and all of these other items, they're trying to create a reserve currency, which is divorced from fiat. I don't know. These particular projects are early and nascent, and there's going to be iterations on them, but they're getting a lot of capital right now. The price doesn't really, serve the purpose that they want it to, but it is the first step in this direction towards making a full digital currency. And I'll just briefly on that, the monetary policy piece of it, my take is, if you are a new country, right, there's a revolution or some turmoil and you're starting from scratch, right? For whatever reason, you will not choose a fiat currency. You just won't do it because you're trying to get this new currency out there, get people to use it. It's a new entity, new government. People won't have the faith in it. You're not going to be able to manipulate the interest rates like the FCOM does, things like that. So if you take that as a starting point, that any new country will choose a digital asset instead of a fiat currency as their reserve, then it is inevitable that all currencies on the planet will be digital eventually. Now, that could be 100 years from now, but if you take that first step, eventually every country, every financial system will break. And this is the new. So this then becomes not a matter of if, but when. So it's a very, very, very large deal. And to Danielle's point about the DAOs and things like that, the newest really exciting area of DeFi, and I'd call it DeFi, money for wouldn't, is play to earn. Which for me isn't so much interesting because, hey, now you can play this video game to generate returns. You can play Axie Infinity. If you're in the Philippines, you can play that game full time and make more than you would in your other job, which is crazy. So we run a scholarship program just to kind of facilitate that. But what we're seeing is this convergence of now there's this infrastructure to allow people to virtually perform tasks and do things. And these concept of the DAOs, like Danielle's talking about, this together becomes an entirely new way to organize a global workforce. Right now, that's huge, like unbelievably large. And we're spinning up a VC fund to go after it and all sorts of things, because that is, again, there's so much opportunities because how large financial services is.
So I've heard with the play.
Sorry, Jeremy, if you don't mind. It's not just financial services. And I recently heard a talk of Vitalik, and he's like, it's great that we can make decentralized finance, but it does not stop there. I know there's DAOs doing social good. There's DAOs addressing basic income. There's DAOs addressing climate change. So it doesn't stop there. And then one more thing I wanted to add is when I think about decentralized finance, I think a lot of people kind of drill it down to like a Uniswap or like a decentralized exchange. But decentralized finance is stablecoins. Like the idea of a stablecoin is a decentralized manner in which you can have a coin that has a value added to it. So it doesn't just stop at the exchanges. And I think Kenny, you did a great job of adding to that and showing some of those others, the lending and the borrowing and everything. So yeah, just remember that DeFi is just step one, and it encompasses a lot of things.
So kind of to piggyback off what you guys said, I've been seeing recently with the play to earn, there's a lot of lending of like accounts and tools that people are earning a yield from. And you mentioned new countries. I mean, a lot of people are considering some of these DAOs to almost operate like their own new countries. So it's really exciting. So first topic I want to kind of jump into is everybody wants to know. I mean, it's high paying. I see some insane yields over 100%. But risk, like what are the major risks? I mean, you're not going to get this easy money if it's not enormous risk. So could you guys, outline what you see are the main risks investors need to worry about and how should they mitigate and manage those risks?
Yeah, I'll start if that's okay, Kenny. I think that if it seems too good to be true, go with your gut and really look into it, do your research. I think the last speaker, mentioned that as well. Like you need to get in here and get your hands dirty, but don't just go willy-nilly and put your money into every single thing and every highest return. Research the team. Can you find a team? Can you find people that are willing to put their name on this product? Do they have a history? I know that, yeah, the 100% whatever returns sound great, but I think I'd rather go for the 30% that has, a year in the industry.
Right.
I think that a lot of red flags for me are if you cannot see the contracts. The whole point of this on-chain world that we live in is that I can see what you're doing and I can know exactly what's happening to my money. And so making sure you can go on, on-chain and see that the contract is open source, maybe seeing if it's been audited or not. And yeah, be smart.
Don't get blinded by the greed.
That's right.
What about you, Kenny? What are the risks and how are you guys mitigating and finding opportunity and making yield from?
Sure. Taking Danielle's guidance here, I will go specific to the market making strategies we have, but just recognizing this is just a small pocket of DeFi, right? But it's one of the life funds. So we have a fund, it's called StableFi. And all we do is we take exclusively stable coins, meaning they're pegged to the US dollar in all cases right now. And we stake them into market making pools, right? What we find is that when a market making pool first starts, like day one it launches, the yields are stupid. And then it decays down to some baseline. So what we do is we at any point in time have 10 to 20 different pools we're in, and we kind of just cycle, we surf, as it were, through the yield to try to maintain a relatively high yield for our investors. So it creates a market neutral. So there's no crypto exposure, no crypto beta exposure at least, but high yield. In that strategy, the risks are, well, first and foremost, stable coins. How stable are stable coins? That nobody knows. Tether, I hope there's nobody from Tether here right now. I view it as a garbage coin. I think that the collateral is not there or is not as solid as they try to make it out to be. So we try to minimize our exposure there. USDC is probably the most secure, in my opinion, the most stable of the stable coins, because they do try to have cash and US treasuries. But before you go into something that's billed as a stable coin, look how it operates, understand how it operates, because I got to watch firsthand in Telegram. Iron Finance had a few months back, they had a stable coin that famously blew up and, cost Mark Cuban a few $1 million and all of these things because it was just an algorithmic coin without the collateral there. There's lots of those types of coins out there where they can easily happen all over again. So make sure you understand which flavor of stable coin you're working with in that scenario. And then second, when you're actually going into these pools, like Danielle said, the code needs to be there, right? Like if you can't see the code, don't go in, because that is the ultimate check. Look for audits. There's services that all they do is they go through and they look at the code and be like, is this hackable? Can the developer make off with all your money? Read them. It's legwork. Don't get me wrong, but that's all there is to it. Make sure that you have a very, very minuscule principal risk, and diversify. Don't put all your eggs in one basket ever, right? Because this is such a crazy Wild West space out there. If you do that, you're eventually just going to lose it, a good chunk of it. So diversify, read the audit, understand what stable coins you're working with there. And ideally, like Danielle said, if you can see the team, because every project should have a team, increasingly, you have no idea who they are. Not the ends of the world, especially because the code is the code. So you don't necessarily have to rely on individuals. But if somebody has their reputation at risk, like just you should have a little bit more confidence that it's not just a complete and utter scam, which I would say probably 70 to 80% of the new market making pools that launch right now are scams.
So that would be considered a creator team that's doxed, right? We need to hit people with the language.
That's right. Yeah. Yeah. Look for dox teams. Yep.
This is one of the few places where being doxed is a good thing. So you spoke about Iron Finance. Is that an example of a stablecoin breakage?
Absolutely. The peg broke. Yep. So the way that they tried to do that is they had like an arbitrage mechanism. It involves some creation and minting and redemption of some tokens, whatever. But the actual collateral on the balance sheet, because in a simple stablecoin, it's like I've got $1 worth of dollars. I've got $1 in a bank account, and here's this asset which is a claim on that dollar. And they make money because they keep the interest, right? It's a relatively straightforward thing. People I think, Jeremy, you might have said it, people get greedy. Like, oh, we don't actually need that 100% collateral. Let's do 70% collateral plus this other mechanism, and then the other mechanism garbage. And that's what happened to Iron Finance.
So I'm going to go to a couple of questions that came in. So the first one is, could you guys discuss your thoughts on DeFi pool with a pool delegate such as Maple? Are either of you familiar with like Maple Finance and pool delegates?
I know roughly what Maple Finance is. I have never used this. I don't know that I'd be able to speak credibly on that.
Okay. What about you, Daniel?
Same for me, unfortunately.
All right. The next one was, this is from Shamir, wants to know, do you ever see Ethereum being replaced because of gas fees with other chains? And at what AUM do these liquidity pool yields drop? If there is a big institutional push, stablecoin pools will rarely get the yield that they get today. What are your thoughts?
Me or you, Danielle? You want to take it?
Go for it, Kenny.
Okay. So yes, Ethereum's interesting. Ethereum 2.0 is Shamir, he's exactly right. Ethereum right now is losing market share in a major way. It's almost like backwards in some sense, in that they have a very strong community, but it's to do a simple transaction. It's going to cost you a couple $100. Any transaction, it doesn't really matter what it is, which is like pretty silly, right? Like if you ever had fees like that in traditional finance, nobody would ever do it. So what you found is you have all of these competitor layer 2 scaling. We can jump a bunch of jargon on there, but we've probably seen 20 to 30 blockchain competitors to Ethereum come online that don't have that scaling issue. The fees are lower. They're able to do everything that Ethereum can. And so that's why you get these Polygons and Solanas and Avalanches. There's tons of them, right? Mm-hmm. Ethereum 2.0, theoretically, when they move to proof of stake, the fee is going to come back down. So the big question mark is in Q1 or Q2 or 2023, whenever they get this thing launched, what's going to happen to all of these competitor chains? Because Ethereum has the most money, it has the most community. And if they solve that scalability issue, are you going to see all of the other ones fail and it's now going to go back to Ethereum? Or are there certain features of it that are going to persist? I don't know, honestly. I have opinions, but nobody knows for sure. If it does consolidate that. Go ahead, please.
Yeah. So I'm a big believer that competition is a great thing and that it's not going to be one chain. That's why like you have the Bitcoin maximalist. It doesn't make sense to me. How did you get so far that you understand crypto and you understand how it will change the world, but you stop at one chain? Mm-hmm. For me, I'm really passionate about what Thorchain is doing. Thorchain is allowing actual communication and trading between different chains, and we haven't seen that yet. And they're getting to a decentralized place themselves. They've definitely had bumps in the road. I mean, they're pioneers. They're paving the road, you know, as they're driving on it. Mm-hmm. And I think that like Cosmos, Atom, definitely check out that network. We cannot say we are here to bank the unbanked if every transaction costs $200. These people don't have enough money to do that. And so there has to be those lower cost, lower fee networks out there. If you look at Osmosis is on the Atom's Cosmos network. It is an automated market maker like Uniswap on their side. The fees are so small over there. The fees to move the money around is so small. So there's plenty of competition up there. And I think that we will see another layer on top of all of these layers and on top of all of these chains that connect them. So we don't need to have one that succeeds over the other.
Okay. I got another question. This one might cause a little controversy. But Robert Kahn says, what about the hypocrisy of the 2 and 20 fund model being imported into crypto? Clearly, that's not sustainable. Fund managers themselves should be coming and being competitive with their rate and fees, and it should be based on a spectrum. Any thoughts on that?
I'd say I'm doing pretty good if you get a 2 and 20 in crypto. Like 3 and 30 is probably more normal. And that, I think that's a self-solving problem, right? Because you currently, especially like when we're talking about this DeFi stuff, all of this stuff is maybe a year old. Some of it's months old. There aren't that many people that can do it, period. Right. So that's why you're seeing these fees. It's a very, very specialized skill set. But fortunately, it's all open source. There's no secret sauce here, right? It's just roll up your sleeves and get in there. So as you see more people come in, you're going to see those fees kind of collapse. Same way you've seen it in hedge funds over the last 10, 20 years as well.
Okay.
Yeah, that's what I'm thinking too. And I also think there's products out there like the Index Co-op is doing some great stuff where you can buy, one coin, they have a DeFi Pulse Index that gets you exposure to 10 to 15 coins. So I don't think you necessarily need someone telling you what to do. You can get exposure. You can do these things on your own and not pay any fund fees.
Oh, and by the way, Diffuse has an index fund, which should be live on the NASDAQ come June. So that's a top 30 market cap weighted index fund. So that's another option as far as passive exposure if you're looking for it.
Okay. Let's see. Another question from Kevin. What are your thoughts on protocols built on top of the yield ecosystem? Example, leverage yield farming, auto compounding, yield insurance. And is this something that you're actively using?
I'm not. We're not in general. Sometimes we'll end up in an auto compounding pool, but almost by its very. So the whole concept of compounding is you get these rewards, they continually accrue, right? So what we do is at least daily, we take all of our rewards, we convert it back into whatever principal we're invested with. So stable coins in the stablecoin fund, and then we stick it back into the pool. So compounds, right? It's relatively straightforward. Auto compounding is just taking that, instead of doing it every day, you do it every 10 minutes, 15 minutes. The issue is if you do that, there's another fee layer, right? They charge, it's not a free service. So it ends up charging. In our case, we're doing it all manually. We're okay to, build out the infrastructure and automate and all of that stuff. So we don't need those types of services. But for somebody who's coming in, they just want passive exposure. They don't want to have to be super manual and make this a full-time job. Perfectly reasonable to pay those fees because they're not extortionate by any stretch.
Your thoughts, Daniel?
I think what I'm taking from that is just there are products like InstaDApp that is allowing you to kind of stack opportunities on top of each other. And, even using a insurance, instead of getting the 10% that you might get, doing it through Nexus Mutual and getting the 8%. So I think stacking and kind of adding to all of this, it's new. And yeah, we're looking into it in particular with the DAO and the Treasury Management Committee that I've chatted about earlier. Claiming the rewards, as Kenny said, is one of the big things for us is the timing and when. You don't want your rewards to be sitting idly for too long, but you can't be doing it every second of every day. So just finding that balance, yeah.
Okay, let's talk about regulation. So Danielle, you started off talking about how regulation affected Shapeshift. Let me hear your thoughts on regulation. And Kenny, I'd like to pass it to you and you tell us about your strategy with dealing with the coming regulation or what you think is coming.
So I think that in terms of the Shapeshift point of view, we've always wanted to offer our product to anyone, anywhere in the world. And that, especially operating as a business in the US, just was not possible. Whether it was the bit license in New York or, it just was one thing after another that kind of stifled our growth. And now that we have seen this opportunity and have seen other DAOs be so successful, it was a no-brainer for us to say, hey, and it's risky. We shut down our entire company. We laid off our entire staff, but a lot of them have had the opportunity to pick up the torch in the DAO and continue working on. And so what that does for us, while there are challenges, you can't sign a contract if you're not a person, and you can't do a lot of the things that a traditional company would do. We also find that there's a lot more freedom in what a smart contract can do and how they can operate a business. And so for us, regulation did become like just quite a weight for us, especially with what we wanted to do and what programs and platforms we wanted to connect into. And so choosing this route of like I said, a smart contract being the top of your business and having all your token holders be like your shareholders and your board and everyone that you're beholden to, it really has helped us tremendously. And we have been able to implement things and work with platforms and make our money make money in ways that we have never been able to before. So for us, it like I said, it was just a no-brainer. But I will say, I 100% support regulated crypto businesses as well. They have a place. I use Coinbase for what I need to use Coinbase for, and then I go use all my other services as well. So I appreciate the regulated businesses doing what they do.
What about you, Kenny?
Yeah, I got, we'll start with a quick one. Stablecoins, we'll go back to that again.
Okay.
If you think about what a stablecoin is, right, you're taking a deposit, you're issuing a script, right, to use the old school financial term, and you're getting interest. That looks a heck of a lot like a bank, right? It looks like a lot like a bank. So that is one area that we know is coming. And every week, I get the text at the weekend, like, oh, they're going to make announcements on the stablecoin regulation this upcoming week. Hasn't happened because it's super complex. And it does kind of dovetail into a larger concern in the space is, and like Danielle was saying, they decentralized because they were running into regulatory issues, right? That's a totally reasonable decision to make. So having a geographically based, if it's the SEC or OCC here in the States, if they're regulating these things, what does that mean? Probably not much, honestly, because a lot of this is overseas already. You see increasingly these new protocols, these new whatever. One of the guys we know pretty well, he sits on a bunch of boards, right? He literally has to turn down about half of the jobs because right there, you cannot be based in the United States. So you're seeing this, to use his term, there's this fear of the US becoming a digital backwater by trying to take these geographic regulatory approaches, which you can't really scale in a meaningful way. So it's actually pretty cool because now, even this morning, there was a bunch of stuff on the wire because you're starting to see the first DAO regulator, where you have a regulatory body that comes into this, what the actual rules are. The DAO holders kind of like choose that. And then there's kind of like FDIC stamp, things like that. Like that's kind of the concept of where they're going, which I find absolutely fascinating.
Like a software?
Well, it's a DAO, right? So yeah, but so you can do smart. So it's not clear where that's going to go, but that very well could be a future state where we have a decentralized regulator that everybody kind of chooses on, and it's a global one. Like that's very different from what we have today, where everything is dictated by geographic boundaries. Now, the last comment, and I know I've talked too long already on this point, is most people that understand these crypto strategies, they don't know anything about running money. Right, managing, being fiduciaries, none of that stuff. Right? A Wi-Fi, spelled YFI, was one of the first yield farm aggregators. And so what they did is here's a smart contract pool. You get your wallet, you put it in here, and we'll automatically harvest these things for you. Okay, it was a big deal when it came out a little over a year ago, right? Well, that's great, but that also cuts off 99% of the potential investors on the planet, because they're not going to be comfortable with the wallet. The people that have the money, I mean, for better or worse, they're probably not going to be super tech savvy. So they're not going to be coming into a smart contract pool with a wallet with any significant size. So for us, and I think this is what Daniel was alluding to, we are taking the opposite approach. So all of our fund vehicles are fully compliant with US law, right? So we do the fund formation and the audits and the taxes, and we pay lawyers way too much to make sure that we're fully compliant at all times. And we do it in a packaging in such a way that more institutional, sophisticated investors are comfortable with it, but they still get that crypto exposure. But it does also massively limit what we can actually do inside of the funds. Got it.
So I got a question about what DeFi platforms we use. So I'm pretty basic. I use Uniswap, PancakeSwap, SushiSwap, Trader Joe's, Polygon. What do you guys use for your DeFi platforms?
try to use them all. Like I said, I really love Thorchain and what they're doing and giving you a decentralized way to trade, Bitcoin to Ethereum. I like Ribbon Finance. I really like Zapper. Zapper is a way to kind of manage all of your positions and things that you have, so you can connect your hardware wallet, just pop in any address and kind of watch it and look at everything. So I think that's a tool that really helps me to keep everything in my mind. Sure. And then I'd say in terms of searching for, I'll just go ahead and kind of add some of those, searching for new opportunities. I like DeFi Llama, I like cryptofees.info, and I'll paste this all in the chat. But both of those are kind of aggregator type platforms. There's another loan scan, and you can kind of see for the loan scan, you can see, all right, where could I get the best rate for my USDC right now? Oh, nice. So instead of having to kind of go to each platform, there's some aggregators out there that are, trying to source it and put it all in one place. And then of course, Shapeshift, we're still building, but I use Shapeshift every day, and it's a great way to manage all of my wallets and see everything in one place, be able to have access to exactly everything you said, Uniswap, SushiSwap, all of those places, and Thorchain, but just have it in one, aggregator type way. That's
great. What about you, Kenny?
We're a bit different because, again, we find the most opportunity is when these pools first launch, right? So the AUM or TVL, whatever term we want to use, is zero by definition. So it's not on DeFi Llama. It's Llama. Wow. DeFi Llama. It's not on any of these scanners. So it's that kind of niche opportunities. Some of them, they all have dumb names. I do not like the naming in this space. Cougar Swap came out a couple days ago. Unirex, Phantom Pup, Bud Farm. These are the names that nobody hears of, and they'll be gone inside of a month or two because, well, they invariably do. Now, if you're sitting there and you're trying to find something a little bit more easy to digest that you don't have to stay on top of, go check out Synapse, which provides a bridging mechanism. So you can provide liquidity on a chain of your choosing effectively. I think they have a dozen different chains, and all the yields are actually holding up reasonably well. So that's one that hasn't been mentioned that is more passive, and you should go check out.
So Kenny, you just dropped some of these new sites that are in that murky, gross, swampy territory. Which kind of an overview of your tactics to try to find some of these new things that are in the underworld?
Hire people. Honestly, that is it. We have 3 folks now. Their entire job, well, not entire job, most of their job is going to Telegram, going to Discord, going to Twitter, seeing when these things are launching, underwriting them, testing, all of the whole checklist we need to do. Because there's probably 20 new ones that come online a day, and there is not a central repository with that information.
Do y'all use any type of AI or any type of automation tools to find some of these things?
Not to find them so much as to manage them. The finding is, unfortunately, because of where we come in, which is typically pre-launch on these pools, you have to do technical integration. By the time you got the technical integration done, the yield will be gone.
Got it. What about what tips would either of you give for a beginner who wants to really learn how to read these contracts, to understand, like you were saying, that there is some money there? What are some high-level tips a person can grasp for understanding an Etherscan or some of the scanning tools to just understand the dynamics of the contracts? What makes a good contract? What's kind of the starting point of the ideas to just identify some of these things?
Danielle, go ahead. You're on mute.
I'll just say, I don't feel confident in doing that in myself. And so I make sure to have people that I do trust, whether that be okay, did they get audited? And you should, if they did, they'll want to tell you that, and they'll want to show that. And then also I'd say just the fact of is it there or not? There's literally some that you can go in and the information is blocked to you and you can't see it. That to me is just a red flag that I will search for. And then I like to, have trusted people around me that I can, understand that from. I'm not going to try to go learn Solidity in my spare time.
So it's a good reason to join a DAO, so you can use that pool of experts.
Sure. Or any, just surrounding yourself with any crypto community, crypto Twitter. I there's some crap on there, but I find a lot of good information, a lot of good people. as same with what Kenny's saying, like these Telegram groups, these Discords, these communities are talking all the time. They're very active. So if you do want to, learn about a community, go join their Telegram. Is it a bunch of like shills and people that are trying to, if it feels scammy, trust your gut. But a lot of times, and if you want to join us in the Shapeshift Discord, you can see that we are doing work. We have our engineering demos, every 2 weeks where we are showing the code behind the scenes. Everything is open source, but then we're kind of showing it to you and showing it how it works. So that's what I would say.
And for jargon, a shill is just someone who's pumping coins all the time and only talking about returns, right?
Yep.
Okay. What about you, Kenny?
Yeah, I don't go in the code either. So it's a whole thing. And honestly, I'm not going to be good at it. This does tie into Justin's question there in the chat, which is what are, I just want to echo what Danielle said, which is auditors are your friend, like rely on other people whose job it is to do these things. Paladin's a good one. We really like Rug Doc is another one that helps kind of state some of these risks clearly.
All right, we got some more questions. So from David Klein, what are your thoughts on Solana and Avax versus Ethereum? I know we kind of talked about the different chains, but what do you guys think on those two?
I think Kenny, you're best for this one.
Yeah, mine's entirely from a return perspective. So both of them have pros and cons. Like Avax has, or Avalanche, I guess is probably the actual name of it. Doesn't, they don't have blocks. It's more of a timing type base. Solana has just a lot of more rapid transaction, higher capacity type setups. Again, a lot of what those differentiate are going to be, 90% covered when Ethereum 2.0 gets launched. So I don't know how super sustainable it is. As far as yields go, we're on Avalanche, we're not on Solana. There's a lot more capital on Solana. So there's an earlier question about institutional money coming in and driving down returns. That's absolutely a thing. And you see more institutional money going into Solana than like an Avalanche or a Polygon or I don't know, Binance Smart Chain.
So Kenny, how do you decide which assets to stake, like stable coins versus blue chip crypto or emerging coins?
Yeah, it's pretty straightforward. Stable coins, there's only 3 of them, right? There's only 3 that we're even comfortable with staking right now. It also happens to be the 3 that most of these protocols even offer. So if you want to do more, most don't have it. It's USDC, that's our strong preference. I think about 80% of our portfolio is there. DAI, and then DAI, and then Tether. We unfortunately do have exposure to, but we try to keep a minimum. What was the second part? Oh, and then the blue chips. The other thing is we just try to keep, the one fund's market neutral, the other's market long for us. There's a gazillion different ways to do it. So for the market long one, we don't want the exposure to all of these kind of like crappy little coins. Like every protocol has a new coin. They're all in DeFi land. A lot of them, most of them go to zero eventually. So we just kind of restrict our universe to the gas tokens. So for Avalanche, it's Avax, Bitcoin, Ethereum, Phantoms, FTM, Solana's SOL. So those would be the only ones we do. So you get that market exposure and you get the exposure to these alternative chains. If they do take off, it works out in your favor.
Okay. So Jan has a question about when you say audit, do we mean CPA reports? Like he wants to know what audit actually means. In question referred to CPA coders who can attest to the accuracy of the governance controls and blockchain construct smart contract accuracy. So could you guys speak to
that? This is not a CPA audit. At all. It's not like that. It's not what you think when you hear audit. It's more of somebody who understands code, has gone in there and reviewed it to make sure that, because the nice thing, for better or worse, at least these market making pools, they're all copy and paste of Uniswap code, right? Plus some few tweaks. So you know what you're looking for, and you've done a few of them. Like, oh, that's new. Like that code isn't in Uniswap. What is that? Go figure it out. It's actually pretty easy to find where the hotspots are. You need to dig into.
So a lot of it's just marketing, or kind of like the differentiation you would say is like incremental upgrades to Uniswap and then marketing.
Yeah, a lot of people like to mess with the fees and the vesting and how often you can harvest rewards and all of these things, try to make a stickier capital. There's any number of variables you can do there, but that's just it. They're variables. The actual core code that it's running is largely the same.
Okay.
And all right. For us at Shapeshift, like when we do any smart contracts, obviously that's going through our whole engineering team, getting feedback there. Then we've got our security department in the centralized. We have a security work stream in the decentralized version. You know, they're reviewing it, they're testing it. But it's a third, when we say auditing a smart contract, we're talking about a third-party service that is not involved in that smart contract themselves, kind of taking a look at it and trying to see, you know, any issues, any ways that people can steal your money. So you really do want them to have that like fine eye. But I think the question also was good. There is also some audits and some stuff happening, especially like in like the stablecoin world, where they are actually auditing, say, the controls in place, their bank accounts, the money in the banks, and that kind of stuff. So there are some audits in crypto businesses that are like the typical ones that you would think of, the money, the controls, and everything. But yeah, when we're talking about these smart contracts, it's people who literally that's what they do. That's their business model, and you know they're trying to keep all of us safe.
Okay. Robert wants to know, when will the centralized exchanges be replaced by a massive DeFi trading experience? You think 5 years, or you think after?
Never.
Never.
I mean, you know, I still get mail every day to my house. I hate it. I mostly throw it away. Email did not replace the post office. You know, digital news did not replace newspapers, but it disrupted them in quite a large way. And so, you know, like I said, Coinbase has a place. Decentralized exchanges, they do have a place in the market, but they will be majorly disrupted by all this DeFi stuff.
So they'll be made better.
Yeah. Well, and they'll have a competitor, so they actually have to improve their product offering. It's not, you know, like banks, and they have this monopoly over our money, and they can be terrible stewards of our money, charge us insane fees, but we can't go anywhere else. And so what's cool is in the centralized exchange and decentralized exchange, there's that competition, and they are getting better. You see Coinbase having more offerings, and you see them trying to give returns and rates and all those things to their users.
What do you think, Kenny?
Yeah, I'll go with never. But also I come from traditional finance, so that I'm a little bit biased. One thing that does incorporate in here is the regulatory question as well. Part of the reason centralized exchanges are preferred is for asset allocators. Like, you can have a regulatory body come in and give a stamp of approval, right? That's something you don't get with DEXs right now. And again, there might be ways to go about that and fix that, but I would be shocked if this is gone anytime soon, or even in our lifetimes entirely.
Yeah. So Kenny, how do you guys custody your assets?
So not well. I mean, we have all the fiscal controls and things like that. The issue that you run into, again, it all comes back to regulatory. You're seeing a theme here in all of my answers with our positioning, right? Like, what is the regulatory environment? What sophisticated investors want is what's called a qualified custodian, which means they have a bank trust license. At least in the US, you're going to want a US state or a federal license. There are two different flavors of both. Now, for DeFi, there's a certain technology infrastructure that you need in order to support custody. So you need to be able to specify, here's the contract, here's the function calls. I want a whitelist over here to, you know, 4 eyes authorization on any particular withdrawal or movement or anything like that, right? DeFi is so new that the kind of first generation of custodians don't have that ability. They just don't. Coinbase can't do that. And they're very, 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 very far from being able to do it. Similarly with fund admins, and Shalon's going to like this one if he's still here. Sidrani is the only one we know of that can actually do DeFi fund admin, period, to the level that we need them to do. So the custodians, they need this infrastructure. And there are custodians out there with this infrastructure. We're onboarding, as we speak, a group called Trustology, which looks like they can check every box. And we're very excited. It's going to make our lives so much easier and, you know, make it easier for me to sleep at night. They don't have a trust license. There does not currently exist a custodian with DeFi technology trading infrastructure and a trust license. So you've kind of got to choose one way or the other.
Sure. Danielle, I'm sorry.
Well, I'll just add for us, you know, we've gone into this. Shapeshift has had a lot of crypto over the years. We've managed our exposure between exchanges that we needed to use and that kind of stuff. But like hardware wallets, and I can't say that enough. I put it in my bio. If you only hear one thing from me today, not your keys, not your coins. And I think that it is really imperative It's a large responsibility, but it is imperative that you understand, especially if you're doing this in your personal life, how to set up a hardware wallet. What does it mean? How to use that ledger with MetaMask if you want to, integrate and do a lot of these things. Also, as a DAO, we're trying to figure out now, like, how do you have a decentralized, a smart contract, owning all these funds, and how do you get that out to people? So we're using Gnosis Safe for that. And they have a lot of people, a lot of like trusted partners using them as a platform and as a way to pay contributors and distribute funds and stuff. So definitely would check them out as well. Okay. Also, I see the Fireblocks. We've looked into them, and I think that Fireblocks has a really great offering in terms of like allowing you to kind of have all the keys and have all the access, but still have someone that can help you and still have a trusted, third party that can help you set up the controls in place and help you make sure that, only this person can send up to this much and this person can send up to that much. Like, they really do allow you to add on top of what a lot of these other wallets don't have. So Fireblocks, for me, I'm more familiar with them, and I really think that they have a great offering.
I can jump in on that specific question as the providers. We actually started onboarding with Fireblocks, and then we offboarded them because they just couldn't deliver on what we needed as far as non-custodial solutions or custody solutions that you can do on new chains. And all of the platforms. They just made some kind of technical decisions around like, hey, we'll do wallet connect instead of MetaMask. Well, you chose wrong, right? Because MetaMask is the norm. Most, but maybe half of sites support wallet connect. So you just don't have the flexibility. And they're working on that. Q1, Q2, that's probably going to be fixed, and it'll be a different story. Trustology does have that. And then the nice thing about the other one, which was mentioned, is Copper. They're based out of London. They have a pending FCA license, which would make them a qualified custodian, to my earlier point. But this changes every day, so maybe it's changed since last I spoke to them. They are only ERC20, so they're only on Ethereum. So if you want to do DeFi off Ethereum, Copper ain't where you're going.
I just want to make sure that everyone is staying with us. So let's just briefly, could you guys define what MetaMask and Wallet Connect are, just so people understand, because I know some people get caught up on that.
Yeah, I'd say there's a few buckets of where you can hold and store your crypto. Okay. The first one is a centralized account-based type thing. So that's where you're trusting someone else to hold your funds.
Like a Coinbase.
Like a Coinbase. Yep. Then you have software wallets are the second kind of bucket. That's going to be your MetaMask. That's a place where, yes, you hold the private keys, but it's been online. Then you've got your hardware wallets, your Ledger, your Trezor, your Keep Key, and those are going to allow you to have never had that private key exposed to the internet in any way. So it's much safer. It can give you more peace of mind. When we talk about Wallet Connect and MetaMask in particular, they are, all of these protocols, they all need to interact with the wallet, and wallets themselves, they have to stay up to date, whether it's like with the chain making changes or, the network, with the upgrades, they need to make sure that they can interact with it, but then also on the individual protocol level. And so we find that MetaMask seems to be like the industry standard of being able to connect to these protocols directly and interact with them. And so staking, lending, yield farming, all of that. And I also find MetaMask really appealing because you can connect your ledger to it. So using that hardware, that really cold storage, but still being able to interact with these DeFi protocols.
And one cool thing that MetaMask is allowing is a lot of people are able to log into a lot of these sites just using their wallet. So it's kind of removing the need for passwords, which is kind of an ancillary side effect. That's great because everybody hates passwords. Yeah. Shamir wants to know, is there ever a risk that a government can block DeFi IP addresses or stop access to DeFi in some ways? What do you guys think?
Sure, they can try. I'll be honest with you, they're not going to succeed. Like, it is so easy to put a VPN in place to get around these types of things. Like, you can go to China, you can still go to Google, right? It doesn't take that much technical sophistication to use, banned ban things. So I'm not advocating do that. Like we don't
Sure.
like aggressively don't do that because it's all sorts of regulatory reasons. But there are enough people that do that you're not going to be able to like the US isn't going to come in and be able to squash crypto because they blocked IPs. Like it's just okay, great. That goes back to the whole this is a global decentralized ecosystem. Geographic regulators don't make that much more sense, make it much sense in this context. And so it just so if you do have governments trying to do that, we're going to block these IPs or so easy to speak, it's just so easy to get around. But it feels a little bit like I don't know the horse and buggy union, right? Like trying to make it illegal for car taxis. Like I don't know, is that a thing that happened? But it has that feeling of like you were just fighting the inevitable. I don't understand.
Right. So adapt or get left behind, huh?
Yeah.
What do you think, Danielle?
Yeah, absolutely. I mean, most of the time you see the DeFi platforms, they're taking this, blocking all, US IP addresses, because it's the only thing you really can do to try to stop people. If they don't have accounts and they don't have KYC and they don't have their personal information, but some regulatory agency has said, hey, you cannot interact with US customers, it's pretty much their only way to like turn that knob and try to stop it. And so like at Shapeshift, we had to block all New York IP addresses because they couldn't use our service because we didn't have the BIT license. It's like the only way that you can really, try and stop it. On the protocol level, there's not really much they can do.
Okay, so let's talk about what are your thoughts on possibly one of the most hyped aspects of crypto, the metaverse? We keep hearing about that everywhere. Are you guys, do you have exposure to it, thoughts on it? What do you guys think?
Go ahead, Kenny.
Sure. Yep. Either way. I like it. It's interesting. Metaverse in and of itself is pretty interesting, but it does, for me, the interest is more tied in with play to earn, which is that new trend. And it's kind of in that metaverse space where you have NFTs and you have all this whatever. And they create these economic packages that start to mirror more and more. You have like these metaverse ecosystems that mirror the real world economic system, which is just absolutely fascinating. Yeah.
Can you define what metaverse means to you and then put that play to earn in context? I know it's a complex thing, but just for our audience, so they have context.
Can I define metaverse? No, I actually don't think that I can.
All right.
It's basically a system of ownership of assets, and NFTs are called non-fungible tokens. So you can buy things in a virtual world. Sometimes it's visual, sometimes it's a little bit more abstract that you can then use, or you can collect, or you can interact with other people. Like you can, in some metaverses, like I think it's OpenSeas, you can like buy real estate, right? And you can develop real estate, and you have these, like it's really is, in the current incarnation, and I think we're going to get away from that, you can mirror most of the stuff that you do in the real world in a virtual world. Now, the pros and cons of that are up for debate. Play to earn is a particular area in there where you have a game, where you have these NFTs, and they've designed it so that you play this game and you earn something, right? And the most popular right now is Axie Infinity. So the way that works is you come in, you have to buy some Axies. These Axies are basically Pokemon, right? You got to buy some Pokemon to start playing. And then the more Pokemon the game you play, the more Pokemon the creature you can breed. And then you can sell that to people coming in. Feels like a Ponzi scheme. Don't get me wrong, right? Like as long as the player growth, as soon as the player growth decelerates, the whole thing's going to collapse, which is, a thing to be aware of. But that's what play to earn is. And it's cool because we have a scholarship program that allows people to do this. We got, half dozen people out of the Philippines that just do it for us. We staked them and we take, a chunk of the rewards. We hired them with a QR code. That was it.
Wow.
We found them on Discord, scanned the thing. Now they play for us and we monitor the results every week. Right. That is just a completely cool way to organize people to work.
So you've got an e-game team.
Yeah.
Sweet. What do you think, Danielle?
It's just kind of like the newest buzzword for me. I'm just happy when anything can kind of come into the decentralized world. And so, if they want to start by using Mana or, Decentraland or something to figure out how to sell real estate, on chain, fine, go do it in the metaverse first, because then we can apply it, to the real world. So yeah, I'm glad you said you didn't have a definition, Kenny, because I was like, I don't know. It's everything.
So Jan brings up a good point. He says the new head of OCC is anti-crypto. This is back to the regulatory questions or statements we've been making. And if the US outlaws it, then the US-based users won't be able to access their accounts. Why do you think regulations won't have an impact?
I think regulations will have an impact, and that's kind of why I am a just staunch proponent of owning your own coins. If you have your own private keys and your crypto in your wallets, then they can't shut it down. They can't stop you from accessing your money. But if you do have it on a centralized platform, they can definitely, seize funds, stop them from operating, especially if they're U.S. companies. So there's definitely a fear there, and it's real. So.
Okay. Kenny, any thoughts?
I just echoing what she said. The question as it's formed kind of assumes a centralized account that can be accessed and blocked.
Right.
That is only true for centralized exchanges or like a BlockFi. If you have stuff on chain, they can't do anything. They just realistically, they're toothless, without teeth. So that's just the reality of what we're dealing with. Now, if you want to be fully compliant, that's a whole other thing. But it's just, you can't make a blanket thing of like, you just can't use these protocols because it's unenforceable.
So something we kind of discuss in the office. Do you think that has a broader effect on if once the US citizens realize that the government does not have a lot of teeth on imposing its will on crypto, does that then bring the question of what's the US government's impact on imposing or enforcing a lot of other laws? Do you think that this has ripple effects on how laws in the US are enforced, generally speaking? Like, do you think crypto is going to like have a broader impact on the rest of the country, the world, just by the facts that a lot of things become harder to enforce?
Danielle,
or people at least question it.
I want to say yes. Like, I come into the crypto world from a libertarian mindset. Like, it will change the world. It is changing the world. Like, we see it in countries where there really is a need. But what I have found is the US moves very, very slowly. And so, yes, it does give people opportunity and access to, I guess, like black markets. It gets you around certain other laws. It allows you to just have more direct access to your money and what can you do with that. So I think, like, yes, it's already having that effect and it's having that impact, but I don't see the government, they don't get it. Like, even the ones that are researching it, even the ones that are making the laws, I can barely keep up with crypto, and it's my full-time job, it's my passion, it's my hobby. So do I think that 70, 80-year-old politicians that also have to care about every care in the world can understand crypto and have it trickle down? No, and not right away. My hope is yes. My hope is that we see a lot of changes due to a crypto mindset. I think we're probably 5, 10 plus years away from any of that.
All right. How about final thoughts from you guys?
Yeah, final thoughts. If you're interested in anything I talked about and I didn't share a link, feel free to follow me on Twitter and DM me. Happy to share any of these resources. I'm really happy to see that the crowd was up to like 100 at one point in here, and it just makes me really excited that people have an interest in learning more. And be safe out there and be smart. It's very risky. Yeah.
Kenny?
Yeah. I don't know, a couple of inspirational kind of comments or observations. The smartest people of our generation are in crypto. That's just a fact, right? Certainly, if
Thank you, Kenny. Thank you.
We might actually be a different generation, by the way, Danielle. So, but it's just a fact, right? Like, it's interesting, it's exciting, it's a tectonic shift, and people get it. So it's not if, it's when. This is happening. If you're still of the mind as an allocator or whatever, that this is just a Ponzi scheme or it's going to go away, whatever the case may be, you are missing a lot of data points, right? And couple that on with the rise of DeFi, again, like, if you can take what financial institutions do and do it without the institution and the golden parachutes and the overhead and the bureaucracy and all the BS that comes along with it, right? Society as a whole will be better. right? It will just run more efficiently. Man, that's actually not necessarily the same, but it will run more efficiently. So this is a huge, huge, huge opportunity. And to go back to my earlier comment, if you're doing just basic portfolio allocation, right? CAPM 101, right? You must accept that crypto is on the efficient frontier. You must have some allocation in your portfolio to crypto, or you are not in an optimal portfolio. Full stop.